In this video, we're going to talk about Wells Fargo, and to kick off earnings seasons, the bank reported their Q3 earnings yesterday. Now, the bank posted lower earnings and revenue amid an 11% decline in net interest income. However, the stock jumped 3% because earnings per share surpassed the estimates. Now, let's scroll back out to the monthly chart, and you can see how price is now within the lower portion of this monthly seller's level at $63. You can see this has been a barrier or ceiling in the past. Although price has wicked into the zone, price has closed down and below the zone. So will this time be different? It is only October 12th, so we have roughly 2 more weeks before potentially this candle closes within this zone. And that will be bullish. However, as you can see, back in January of 2018, we had this rally in price, and then that was the start of this huge collapse down to $22. Now let's zoom down to the weekly chart. And you can see how price has somewhat been downward. However, if we scroll down to the daily chart, I do want to bring 2 levels of interest. This should be right there. We have this rally, basic candle rally out. That was good for 1 hit. And then depending on how you draw your zones, that was good for another hit to the upside. We also have a lower zone. This rally base rally out, and as you can see, that was a level of interest where buyers stepped in. Although you had wicks down below the zone, the buyers stepped in and pushed price higher. Now, to get more details into the earnings, let's look at this video.
Becky, yeah, and the shares are moving lower on these numbers. We see a top line miss, a slight miss on the top line for Wells Fargo, reporting $20.37 billion, which slightly missed analyst estimates. EPS $1.42 per share, not comparing at this point in time to consensus. And also net interest income, that's the profitability metric for loan making. That was also slightly below expectations, coming in at $11.7 billion, whereas the street expected $11.9 billion, and that is down 11% year over year. On NII guidance, the company expects 2024 net interest income to be down 9% from 2023's level. That was within expectations that was set last quarter, and the fourth quarter NII is expected to be in line with 3Q levels. For non-interest income, this is areas like investment banking, advisory fees, and so forth. That was actually up 12% year over year, coming in at $8.7 billion. And that was a beat relative to expectations. Provision for credit losses, this is pretty interesting as well here. Seeing a $1.1 billion provision, that was a beat relative to expectations of $1.3 billion. And some of that was $1.1 billion in net charge-offs. And NCOs actually declined from 2Q levels. And there was a $46 million decrease in allowance for credit losses, which may assume a little bit stronger of an economy and a little bit stronger credit quality, perhaps, than we've seen in recent quarters here. Non-interest expense coming in at $13.1 billion. That was also a beat relative to expectations of $13.2 billion. So this is definitely one to watch. It appears that shares have rebounded a little bit on these numbers as investors have had some time to parse through them, guys.